Well, as Bob noted earlier, you begin breaking levels. And in the earlier sell-off the other day, you didn't have carry-on selling. And when you break a level, sometimes they have algorithms say, uh-oh, that's a sign of danger, sell some more. You're getting some of that today. Secondarily, you've got, relative to the China worries, the Treasury auctions this week have been not so hot. They've been lightly bid. And that gives people concern that maybe China is boycotting some of these auctions, not selling bonds, but certainly not buying them. It should be a flight to safety. You know, if there's a bond auction in a market like this, you would think the bids would be 2 times normal. They're not. So that raises the question about China. So the market really here is a little concerned. Again, as I said earlier, it's like a patient who has a cardiac event. How well do I feel? And they tell that by how they react to these supposed support levels. So the market's going to leave here nervous. The market on closes had been leaning to the buy side. 20 minutes ago, they flipped to the sell side. That's also adding to the pressure.
Yeah, the sentiment very shaky. Art, hang on. We're going to have Sam Stovall join the conversation from CFRA, Sam. Feels like a mix. We had bad housing data, some disappointments when it comes to earnings. What do you see as the primary driver here as we watch stocks sell off 555 points with a few minutes till the close?
Well, Sarah, I think as Art just mentioned, right now investors are focusing on the technicals. Prices tend to lead the fundamentals, and since the fundamentals are still calling for good economic growth in 2019, about a 10% increase in corporate profits, I think that investors are looking at the price action to say, gee, maybe we should be revising our earnings forecast for the coming year. So the 2,700 level, breaching that brings us back to the 2,600 level on the S&P 500, where we'll probably see some support between 2,580 and 2,600.
Art, how would you characterize the sentiment out there? In other words, we often look to whether we're washed out, whether everybody is bearish and there's just been a lot of selling. How does it feel to you right now?
It's not a stampede. It is a bit of a cascade because they keep breaking levels and that brings in selling. But if everybody was panicking, it'd look much more like a cattle stampede, and the volume would be much higher than this. So unfortunately, it's still rather organized selling so far.
Sam, how do you go about telling investors whether to do some buying amid this sell-off with some of these sectors getting pounded, some of the best performers all year like tech and communication services?
Well, I think in the near term, you just pretty much step out of the way and let the market find its own footing. What I have been saying before on your show is that we've had several times in history in which we've had 2 5+% declines in the same year, and typically the second decline ends up being deeper than the first one because we didn't reset the dials enough the first time around. So the implication therefore could be that we see this S&P 500 off by 12% or so, which would bring us down to that 2,580 to 2,600 level I just mentioned, and then typically those that were worst become first. Those that were beaten up the most tend to then rally off of that bottom the quickest.